Hi and welcome to a quick review of a couple of UK based stocks. Second video for this morning, 20th of January 2013. First one dealt with a couple of Forex charts and pairs and the levels that I was looking at. This one's going to deal with two UK based stocks, BP and Smiths. Up here I've got a chart of oil, which I've noted a couple of levels on, level of support there and resistance here, and now just broken and hopefully going to hold us as support. Well, I say hopefully, I've got no fan of high oil prices obviously, but for the point of the trade, I kind of need that level to hold. Whether we revisit it again, I don't know. One would expect the next obvious target to be $100. That reads across into the next chart for BP, and we see BP was in a band. I actually got long BP back in early July, and it went nowhere for me for the last 6 months. We've just broken out of this band here. Whether we can get any real momentum, or whether in fact perversely high oil prices will lead to a sell-off in equities, is anybody's guess. But we seem this week to have broken through this band late last week. My hope obviously is that having been long the stock for some time, I think it's well undervalued, but it's the market's opinion that matters, not mine. I'm hoping we're going to head for the 500 level to retest the old 2012 highs. And the other stock I wanted to bring up this morning is a short. I blogged about this on Monday on the back of HMV's demise. This is wh.smiths. And for me, it's very similar to the HMV business model. It's an old bookstore, record shop. It has really no online presence to speak of. You go in its stores now, it's mainly pick and mix. Although, to be fair, it's got a very strong balance sheet. But they're returning money to shareholders via a stock purchase, which was ongoing last year and is going to continue this year. So if you've got a business with plenty of cash, falling revenues and an outdated business model, and all they can think of to do with their excess cash is return it to investors, I think they've got a problem. Having said that, way back here in January 2012, I shorted the stock for similar reasons actually. I thought the gift of the Christmas previous was e-readers and tablets, much the same as it has been this year, and that would eventually kill the magazine and book market, pretty much as the iPod did to the music business, or at least the high street music business. But that trade didn't work out too well for me then. It's all about timing, I guess. And Smiths ended up having a good year, so I am short Smiths again. I'm not sure whether this spike is actually genuine. This is a spread betting chart, and the lowest recorded price I can find is 598, not way down here at 570. So I pretty much ignore that for analysis purposes. I'm hoping, I wouldn't be surprised to see some sort of correction back to a moving average, but I'm hoping we're going to test this 563. There'll be plenty of fluctuation in the stock if their buybacks continue this year, but it's a name I'm short, and I'm hoping to stay short for the rest of the year. That's going to round this video up. I don't want to take too long on each video. As I say, this is the second video of 3 for the morning. My third and final video will deal with a couple of commodity charts. Hopefully next week I'll have some further updates.